Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Presently, the Australian dollar wavers in front of the key level of 67.45 as its rival, the US dollar index, recaptures the 105 handle following the US Federal Reserve Chairman Jerome Powell's delivery of his semi-annual report to Congress on Capitol Hill. Powell emphasized to Congress that the Fed is focusing on timing rate cuts amid shifting balances between inflation and labor market strength. He stressed that the decision will be made meeting by meeting. During his testimony, Powell also underscored that elevated inflation is not the sole risk we face, cautioning that delaying rate cuts too late or too little could unduly weaken economic activity and employment. Recent economic data, such as June's job report, suggests a gradual cooling of the economy, which has given investors more confidence to an earlier rate cut, as some are viewing in September, with key upcoming indicators to monitor, including Thursday's June CPI or the Consumer Price Index data, and also with Friday's PPI or the Producer Price Index. Market participants will be keen to see if the CPI figures come out slightly weaker, and if so, could prompt the Fed to signal an interest rate cut, not in September, but leaving the door open for later this month. Although the technicals have wavered somewhat from the recent retreat from 67.45, it is anticipated further demand should eventually take out 67.45 and move on to 68 cents, with any weakness viewing support around 66.85. The euro, meanwhile, showed a mixed performance as the dollar index, as mentioned, edged up to 105. Given the fact that the technicals have pulled back somewhat, it is anticipated that we should get a move through 108.30.40 and on towards 109 as a potential target, with the support seen around 107.80 to 107.30.40. Having taken two challenges to the downside, the dollar yen is somewhat firmer. Bouncing off the level of 160.2025, the market has recaptured 161, but I'm still a little bit cautious given the fact MACD is still weak and therefore could have raised these gains and look back towards the bottom side of the range. And if we do see a break of 160.20, opens the way to this trend line seen around 158.25.50, which is my preferred view. Sterling also a little bit mixed or weaker, and therefore finding support currently around the region of 127.65. I feel any further weakness should find demand and eventually see the market take the challenge towards this top side region of 128.5. The gold outlook, well, the market is still maintaining a hold above the level around 2,360, and in light of the current strength that we're seeing here recently, could see a rise back to 2,400. I don't want to get too negative due to the fact that the technicals have strengthened somewhat on a broader case and therefore could see this level cleared around 2,400. But one step at a time, we do need to see a little bit more to the upside and also firmer technicals to even indicate a break beyond 2,400, and still keeping an eye on this base somewhere around 2,350 to 60. Moving on to oil, the market has fallen there for the third consecutive day and looks towards its key level seen at 80.40.60. Now, we do see a break there would give further scope to the downside and bring in a target around 77.40.80, and with the resistance seen around 81.5 to 82.20.30. Well, that's a wrap. Thank you for joining me. As always, look out for the interest report and I hope you enjoy the great start to the day.